Hey everyone, Corey Schrader, Black Creek Wealth Management. Hope you're doing well. Welcome to What is Corey Trading this week? It's really where I hope to educate you, maybe even give you a little tips and tricks around what I'm using and what kind of indicators, what are some of the terminology and things I use to help make not only myself money, but also the clients that I'm helping get through these weeks and make some short-term profits while we're still investing for the long term. And that's the biggest thing I'll always tell of you. Make sure you know the difference between trading and investing. What I'll be going over today is trading. Investing overall is for a longer term time horizon. But hey, when the markets are moving around, we might as well make some extra money while we're waiting for the longer term investments to grow. And that's what I do. So really appreciate you tuning in here today. Wanted to show you a little bit around what I'm looking at and what I'm going to be trading this week. So let me go ahead and share my screen with you. And I'm going to add a couple of indicators and talk to you about one or two of them today that I use to help make some of these decisions. So first thing, I'll go ahead and show you a little bit of my watch list or the individual positions that I typically get into. I do have quite a bit more that I really choose from. I call it my stable. And as it kind of catches up with us here, I'll show you. But I really like to look at things not only from a high PE or a high price to earnings, a low price to earnings. I like to look at momentum stocks. I like to look at high volatility stocks. I like to look at all kinds of things because you never know what the environment is really going to do. So as a huge disclaimer, again, take this from an educational standpoint. Please do not take this as gospel for your specific situation. If you do want to know what is specific to your situation and you do want to talk with me, give me a call and we can definitely set you up and see how I can help get you arranged around some of these things. But overall, take this as kind of an educational perspective. I'm not soliciting anything here to buy, sell, or even hold. It's more of just, this is what I'm doing. And if you find value behind it, ask me questions and I'll be happy to tell you a little bit more. So here's what I'm looking at this week. I already said on my other call, you're going to have a lot of uncertainty this week. So let's go ahead and get into, I'll go to the 1 year, 1 day. So if you've been following me for a little while, or you've been following my newsletters, you can see on a 1 year number, we're still down. So if you go back to May of last year or June 1st of last year, we're still down. We're still down about 6. So you're down about 1.5% year over year. You look at the 1 year, well, or I should say, excuse me, not 1 year, the year to date. Let's take a look at that real quick. So year to date, we're sitting down. So what does this mean? What should I be doing? What should I be looking at? Well, when I look at my trading, and again, this is my trading, not my investing. When I look at the trading, I'm looking at it from a weekly perspective. I've found that just through my different strategies and my different trading just experience that I've seen, I like dealing with weeklies because I'm dealing with Monday through Friday. I'm just dealing with the volatility of the week. I don't have to hold anything over the weekend. If anything falls apart over the weekend or blows up or even goes really well, I'm not going to be impacted negatively or positively. I can get in and get out on the week and be done with it. And I like that type of quote unquote control, right? You have people who are day traders, like to get in the morning and out in the afternoon. I like mine for about a week when I look at this. So every time I'm looking at these types of strategies, I'm looking at how can I make 0.5 to 1% on average a week over a given time period. And really, it's also just from the lens of how can I beat the S&P 500 over time on a risk-adjusted basis? Because overall, the S&P 500 averages, let's just say 7 to 9%. Most people are going to tell you averages 8 to 10. I think it's more 7 to 9. And volatility is usually about 15 to 20% on any given year. This year, it's obviously been much higher. So if I can arrange to, get about 1% a week, even 0.5% a week, that's still doing much better than the average investor is in the short term, right? Even in the long term. So one of the things that I'm looking at and what I'm going to talk to you, just address with you, is the concept of support and resistance. Okay. If you already know this, just bear with me. I'm going to get through it real quick. So support and resistance just means where are the levels that buyers and sellers are either, again, from a support perspective, where sellers are seeing the restriction, where buyers are coming in and holding a level playing field. And you can see that here. And I'll use bar charts because it's almost clearer to see. So you can see here, just overall, you can see, and I'll use this as an example. So you can see right here where prices drop just off a cliff from 1 week to another. And there was a little bit of some support right at 410. The market tried to sell a little bit, so it went a little bit down, but ultimately it came back, and then it saw resistance right at about 429. So on the week, that's a huge range. But you can see where sellers came in, sold, buyers came back in, they believed the price should be higher, and then the sellers outweighed the buyers at this point. So it created a resistance level. It's like hitting a ceiling. So sellers, when they hit the floor, they can't go any further. And when buyers hit the ceiling, they can't go any higher. And that's, the whole concept of support and resistance is just the supply and demand on that specific week. And what you tend to see is you start to see these ranges over time of using various closes to establish these consecutive supports where maybe it's been 5, 10, 15 weeks, and now we're testing those prior supports when buyers came in and stopped the sellers from selling. So when we look at what's going on this week, you can clearly see over the last 7, 8 weeks, it's been a little bit of what I would call a sideways, or it's almost like a consolidation rectangle pattern, okay? And you can almost make a box from 406 to roughly about 386, and you can see it overshot on both ends. But for the most part, it's settled in that range. Well, if that was what the range was for the last 5 or 6 weeks, do I believe it's going to continue to stay in that range? And so I look at what happened last week. Well, last week, there was a huge jump. It broke outside of that box and pushed us to prior support and resistance levels. I said this last week. I still think the range on the S&P 500 is going to sit somewhere between 4150 to 3850. Well, it closed up at about right at where it's at today, 415.20 last Friday. Well, as you can see what happened today, and I'll show you on the daily, this is what happened today, is as soon as the market opened up, and this is the day over here, this was Friday, this is the noise in the aftermarkets, it opened up, tried to sell off, and then just had basic buying throughout the day. And we're back to where it closed essentially on Friday. So when you look at what's going on from just a weekly perspective, when I'm looking at the S&P 500, I know this week is going to be almost a tug of war. There's not a lot of news out there. You're going to have some Fed Fed governors talking this week. We're fighting with Russia when it comes to oil. So I know it's going to be a relatively uncertain week. And I believe it's going to be more of a, how's a nice way to put it? It's just going to be a tug of war, if I just put it bluntly. So if I show you the candle, essentially this is what they call, it's not a piercing, but it's getting there. So the biggest thing to know is that there's a lot of buyers that are coming in, but you have a lot of sellers too that are trying to figure out where is this market going. So in a sense, it's going to be a pause week. And when we have a pause week, it usually zaps the volatility out of the entire market, okay? So usually volatility sits somewhere around 35, which I'm not going to get into the VIX and volatility right now, or implied volatility versus historical. I can absolutely do a special, maybe I'll do that next week, a special thing on this. But the key thing to know is that right now, over the next 30 days, it's pricing in roughly a 23% move in the S&P 500, okay? So you can break it down. Ultimately, what we're looking at is about just shy of a 1.5% move on a daily basis, okay? So we could see a 6% move this week. We saw it last week. It's really not the case because we're seeing, again, that tug of war, which with tug of war, zaps out volatility, which zaps out premium if you're an options trader, which I am. So when I look at what's going on this week, the biggest things I would tell you is you can always look for those things that are called oversold. And I will use Target as an example. So we can look at various studies. I'm going to look at a momentum study here, and we're going to talk about RSI at another time, but it's a relative strength index, and it's right down here. Let me go ahead and move it up. And what it tells us is what is the environment? Is it overbought? Is it oversold? And it's based off of the momentum of selling and buying. So the calculation is number of up days divided by down days. I'll do another series on that one, but it's a good way to understand that these different levels indicate and gives us some level of, what's the best way I can put this? It gives us a good trigger point of, hey, is it time to sell? Is it time to buy? What are we doing? Oversold, which is down here, means that, as you can clearly see, price dropped from 212 all the way down to 164 and is, again, trying to hover back and trying to get back to the glory days. So you can clearly see that it oversold. Well, you can modify and adjust, and I usually adjust this study. See if I can go ahead and do that real quick. So what I typically like to do on my studies is I like to keep them within a 1 week or 2 week period. So right now this is almost a 3 week period. So what I'm going to do is I'm going to update it, and I'm going to try to calibrate to really more of the peaks and valleys of this and try to get a better indication of, okay, once it hits a certain high, okay, well, it broke up here. Clearly it went into the overbought arena. This is essentially the way I look at it is as soon as it breaks this 70, now it's something I need to make an active decision and say, okay, I can go ahead and sell, or what I prefer to do is set up a trailing stop on the position. So that way, as the market keeps going up, you take advantage of the up, and then when it drops back down, it sells you out, and then you're out through all of this, and it takes a lot of the guesswork out of it. And you can even do the same thing here. It says, okay, well, I know I want to buy here. Well, is that a good or a bad thing? Well, right then and there, if you were to buy it and within a week, it's down here, well, you're probably not as happy. Well, but think about where you bought it versus where you could have bought it a week ago, right? So it's all about looking at where it is from a perspective. My belief is it's probably going to try to get back up to 184. It's just going to remove this window. It will definitely test it. It may take it another couple of weeks, but Target is definitely one that I look at because Target's a good company. I mean, it had some challenges with the way it managed some things, but from a technical perspective, it has clearly been oversold. It is clearly trying to fight back, and you can clearly look at the options and see that there is a lot of wiggle room for you to be able to make some money on this. So Target's one that you could easily look at using a mean reversion strategy, a momentum strategy where you're playing these highs and lows. And essentially that's what a swing trader does. They'll come in, they'll buy or sell here, wait for it to drop, they'll buy here, wait for it to run. When I was doing this, I would set, if a position hits 8%, I'm out, wait for it reset or find another one to go to. So Target's one I'm looking at. Adobe, this is a high PE stock. Usually higher PE stocks carries with it volatility, which carries with it higher premiums. So not going to pound on a couple of things, but what I will say is if you are looking at wanting to set support and resistance levels, you can do this. You can say, well, okay, it's been clearly dropping for a very long time. You could argue, and I don't like to argue, but you could argue, and I typically as a trader like to look outside in. And most traders will do this because you can see where things were in the past and almost look, and you can already see where I have a little bit of a play here. You can see where some of these floors and ceilings can really be set up. I mean, you could make an argument that 380 is the floor for Adobe. You could make that argument because it was a prior resistance, and usually prior resistances become future supports. So when I trade, and again, it depends on if I'm being more defensive, more aggressive. if I was being aggressive, I would probably shoot for, again, this 380 right here. I like to be a little bit more defensive, so I would definitely play this gap and look at this resistance or support level at about 350. And what I would do is I would come in here and I would look and see, okay, well, if I'm going to eventually want to own the shares, maybe I would sell a put, right? I could make 2 cents off of it. You're not getting much there. So I could sell it and make, a little bit of money. And if it drops, well, then I get paid out, right? So I can make 20 bucks on it. If it falls, I now own the shares at 350, and then I could start doing covered calls. So there's all kinds of fun strategies, and I'm not going to get into all of them because there's a ton of them. But, Target, Adobe, Lowe's, Microsoft, SPY, Qs, a lot of these things are ones that I jump into. But I would definitely tell you, use support and resistance as your first gauge of what do I see, where do I see it, and how can I find what this strategy is. You can clearly see that we're starting to still see that downward trend. It's trying to buck the trend. If I look at Adobe specifically and look over the last 10 years or even last 5 years, let's just look at that. Let's see what is the trend, right? So and I've done this many times and it still holds water today. And I'll leave you this last thing, right? So even if we look at a 5-year trend line, right? Okay, look at the highs and the lows, right? So try to, let's be a little bit more conservative, right? So let's do this, right? Let's say we're going through just the troughs and we're not settling on any closing prices. I could easily make an argument saying that right now we are oversold on Adobe, easily, just by that 5-year trend. Clearly, you can see that if you look at this trend line here, you can clearly see that we overshot, right? And that it's really in a channel at this point is what I would call it. And you could clearly see that we are bouncing around that channel. But as of right now, we are starting to see a little bit of some potential oversold conditions. So when I see that, it gives me confidence that I could probably trade somewhere around 355, 360, and it'll probably hold right now. But remember, interest rates have changed the dynamic. But as I showed in my other video, the 10-year doesn't have much further to go. And we've already seen a huge drop off due to that rise. So what I would tell you is take a look at a couple of things, stick with your low PEs if you can. Again, it depends on the strategy. I'm doing a lot of spreads. I'm doing iron condors, and I'm also doing covered calls. So there's a number of things and different strategies that are working right now. Look for things that are of a neutral strategy, like your iron condor, like your covered calls, like your cash secured puts. Those are really going to help you get through this period right now. And then once we see this plane hit the tarmac, I am going to absolutely be drilling down on bull call spreads for everyone, bull put and bull call spreads, because that's where you can really take advantage of the market moving up. So I hope this wasn't an overload of information. Some of the things I'm looking at, if you want more detailed or you want me to explain something, text me, email me, call me. I will definitely make sure a video's gone for you. But have a great week of trading. God bless, and I'll talk to you soon. Take care.